Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange bringing you a review of this week's stock market. On Monday, existing home sales for May jumped 5.1% to 5.35 million units. Year over year, it jumped 9.2%, and prices are rising up 7.9% year over year. In addition, some optimistic news about Greece's debt situation emerged and markets rallied, with the Dow Industrials up 103 points and Nasdaq closing up almost 37 points to set a record high. On Tuesday, durable goods orders for May were down 1.8%, weighed heavily by a plunge in aircraft orders. The flash PMI manufacturing index for June came in lower than expected at 53.4 and slightly lower than the previous month's 53.8. And new home sales for May were up 2.2% to an annual rate of 546,000 units, which is the highest level in more than 7 years. The supply of new homes is dwindling, creating a seller's market. The major indexes closed up slightly. However, Nasdaq did close at another record high. On Wednesday, the final revision of the first quarter GDP came in at minus 0.2%, not as bad as originally reported due to consumer spending numbers that were revised upward. Talks with Greece stalled and markets were down sharply. On Thursday, jobless claims for the week ending June 20th were 271,000, only up 3,000, and personal income for May was up 0.5%, while consumer spending was up a strong 0.9%. The flash PMI for services was down 2.8% to 54.8, and the weakness surprised economists while negotiations with Greece remained stalled. Markets closed modestly lower. On Friday, consumer sentiment in June climbed to 96.1, a 5-month high. However, concerns over Greece's June 30th debt repayment deadline dominated the news. Markets opened mixed. Now let's take a look at some stocks. Martha Stewart Living Omni Media shares spiked down at the start of the trading week after it was announced that Sequential Brands Group will be acquiring the Martha Stewart empire for $353 million. BlackBerry Limited shares plummeted this week following the release of their first quarter earnings, which missed forecasts. BlackBerry reported that revenue fell by 32% to $658 million, which equates to a loss of 10 cents per share. Forecasts had BlackBerry at $685 million in revenue, losing only 4 cents per share. Netflix caught some eyes this week after the online video streaming company touched a new 52-week high of 706.24 after they announced they have received approval for a 7-for-1 split in order to make shares affordable enough for everyday traders. After hitting the 52-week high, activist investor Carl Icahn announced via Twitter that he has liquidated his entire stake in Netflix, causing the shares to plummet back to under the $700 level. Whole Foods market shares fluctuated erratically on Thursday after New York City's Department of Consumer Affairs announced that the supermarket chain is being investigated for overpricing prepackaged foods. The investigation is still ongoing and fines have not yet been issued. To be noted, Whole Foods paid $800,000 last year in order to settle a pricing irregularities investigation in the state of California. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.